Hey everyone, and welcome back to the channel. If you're trying to make sense of the US housing market, you are definitely not alone. Just when we thought we had things figured out, the latest May data drops revealing a market that's stirring ever so slightly, but in truly fascinating and contradictory ways. We're seeing a small uptick in existing home sales, yet prices are stubbornly hitting new record highs, and the overall picture is as complex as ever. Let's break down what's really happening and what it means for your wallet and your plans. Let's dive right into the numbers from May. Existing home sales saw a modest 0.8% increase from April, bringing us to a seasonally adjusted annual rate of just over 4 million units. Now, a monthly increase sounds positive, especially after April and March recorded their slowest sales paces since 2009. The small climb actually topped what many economists were expecting. However, it's crucial to put this into perspective. Compared to May of last year, sales were still down by 0.7%. This marks the fourth consecutive month that sales have dropped year over year, making May the slowest month for existing home sales since the depths of the 2009 housing crisis. So while we aren't seeing a free fall, this market is definitely operating at a very sluggish pace. Now, for what might surprise you most, despite this subdued sales activity, the median existing home price for all housing types hit an all-time record high for the month of May, coming in at a staggering $422,800. This isn't just a bump, it marks the 23rd consecutive month of year-over-year price increases. Think about that for a moment. Nearly 2 full years of continuous annual price hikes. While the rate of growth has slowed down, the sheer climb since the pandemic is astounding. The median U.S. home sales price has soared by 52% since May 2019. Compare that to the average hourly wage rate, which has only increased by 30% over the same period. This widening gap between home prices and income is the core reason why affordability remains such a critical barrier for so many Americans. For example, to afford a typical home with a 20% down payment in May, buyers needed an annual income of about $91,960, which is nearly 87% more than what was required in May 2019. On a more encouraging note for aspiring homeowners, housing inventory is finally on the rise. Total unsold homes reached 1.54 million units at the end of May. This is a substantial 6.2% increase from April and an impressive 20.3% jump compared to May of last year. At the current sales pace, this translates to about a 4.6-month supply of unsold inventory. While a balanced market is typically considered to be a 5 to 6 month supply, this increase is a welcome development and signals a move away from the extreme housing shortages we've seen. It means more choices for buyers and a potential shift in negotiating power. However, it's worth noting that even with this improvement, the inventory level is still well below the roughly 2 million homes that were typically for sale before the pandemic. So why are sales still sluggish despite more homes hitting the market? The undeniable culprit is persistently high mortgage rates. These elevated rates are the primary affordability hurdle for many would-be homebuyers. Homes that went under contract in April and May, which closed in May, likely faced average 30-year mortgage rates ranging from 6.62% to 6.89%. As of mid-June, the average rate for a 30-year fixed mortgage was around 6.81%, which is only a slight dip from earlier in the year. When you consider that higher rates can add hundreds of dollars to a monthly mortgage payment, it's no wonder many potential buyers are hesitant. This challenging environment is significantly impacting who is able to buy. First-time homebuyers, who historically made up around 40% of sales, accounted for only 30% of transactions last month. It's a nearly impossible market for them to enter. On the flip side, cash buyers, who are less sensitive to interest rate fluctuations, made up a notable 27% of transactions in May, allowing them to proceed where others cannot. We're also seeing a slight increase in individual investors and second home buyers, indicating that some are still finding opportunities in the current conditions. Properties are also taking longer to sell, with homes staying on the market for a median of 27 days in May, up from 24 days a year ago. This longer sales cycle is starting to put pressure on sellers, leading to more price reductions and concessions. An interesting phenomenon we're observing is the rise of the incidental landlord. Many homeowners who locked in ultra-low mortgage rates during the pandemic are choosing to rent out their homes rather than sell. simply because the rental income can significantly exceed their low mortgage payments. They're reluctant to give up those favorable rates and jump into a higher rate environment, leading to fewer existing homes returning to the market for sale. Breaking down the sales figures regionally reveals varied performance across the country. The Northeast and Midwest showed positive growth in May, with sales increasing both month over month and year over year. For instance, the Northeast saw a 4.2% rise in sales and a 7.1% increase in median prices year over year. The Midwest also reported solid gains, with sales up 1% year over year and prices increasing by 3.4%. The South, while experiencing a monthly increase in sales, saw a slight year over year contraction in both sales and median prices. The West, which is the most expensive region, reported a significant year over year decrease in sales by 6.7%, though median prices still edged up slightly. It's a clear reminder that housing trends are very local and national averages don't always tell the full story for every area. When we look specifically at single-family homes versus condos and co-ops, the picture diverges. While single-family home sales saw a small uptick month over month, they remain near historic lows, actually below levels seen back in May 1995. The condo market, however, is facing tougher headwinds. Condo and co-op sales decreased in May, dropping to their lowest point in data going back through 2012. The supply of condos has spiked, reaching levels not seen since the 2012 housing bust. This suggests that a condo bust might be unfolding in some areas, a direct consequence of prices that soared far beyond what the market could reasonably sustain. Indeed, in many major cities, condo prices have already dropped significantly from their peaks, with some like Oakland, California, seeing prices return to where they were 9 years ago. Looking ahead, the outlook remains cautiously optimistic. Economists generally expect mortgage rates to stay within the 6 to 7% range for the rest of the year. However, there's growing sentiment that rates could begin to decrease in the second half of this year. We've even heard Federal Reserve officials discussing the possibility of resuming interest rate cuts as early as July, provided inflation trends remain favorable. If mortgage rates do indeed fall, combined with robust income growth and a strong job market, we could see a notable increase in home sales across the country. The market is undoubtedly moving toward a more buyer-friendly direction, away from the intense seller dominance of recent years, offering more choices and opportunities for negotiation. So, what does all this mean for you, whether you're looking to buy or sell? For prospective buyers, patience is truly a virtue. Take your time, understand your budget, and thoroughly research areas and properties that fit your needs. Don't hesitate to negotiate on price or ask for concessions. The market dynamics are shifting in your favor. For sellers, it means being realistic about your asking price is paramount. The days of guaranteed multiple offers and homes selling above list price are becoming less common. Your property needs to be priced competitively and presented well to stand out. We are in a period of market recalibration, not necessarily a boom or a crash, but a nuanced adjustment. Understanding these underlying trends will give you a significant advantage as you navigate your real estate journey. Thank you for tuning in and staying informed about these critical shifts in the housing market. If you found this information helpful, please give this video a thumbs up, share it with anyone you think might benefit, and make sure you're subscribed to the channel so you don't miss our future market updates. Until next time, take care, and I'll see you in the next video.